Up only.
10, 9, ignition sequence start. 6, 5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Down badly.
Hello and welcome to Up Only TV. I'm Ledger, Cobie, and I are on to cope today. Before we get to our full-fledged cope session, let me say thanks to our partners over at FTX. Go to uponly.tv/FTX. You can trade there if you have any money left. You can track your portfolio. I'm sure it's down bad. We'll all figure it out together. Sam has all the money. We hope he'll keep up with this sponsorship. We're going to need it in the bear market. Thanks to FTX for being our partners. uponly.tv/FTX. Let's get to the show. Cobie, how you doing?
Yeah, mate. I've got COVID.
I just had COVID, so here we are.
I've got COVID, but it's not too bad. I mean, I'm sure for some people it's not great, but it's just like having a cold.
You're just trying to get bonus points with crypto Twitter. COVID's just a light flu. Mine was the same.
Yeah.
I guess if you got the vaccination.
Otherwise, yeah, pretty good. I don't know what's been going on. Haven't looked at Twitter in a while. Took about a month off. I imagine everything's going well as usual.
Depends on your definition of going well. We're getting vaccine questions in the chat already. We started it off great here.
Yeah. I mean, yeah, it's weird, isn't it? Because, like, with crypto, if you go back to, like, 2017, you probably just tell everyone everything's a scam, right?
Yeah.
You don't know to prove it. Not you, like, Bitcoin's not a scam. You think Ethereum might not be a scam, but who knows? Like, Vitalik looks pretty weird, so you never know. Who knows what Ethereum does? So, like if your friends asked about crypto in 2017, you might say it's a scam. It's all a scam. Even if you thought Bitcoin and Ethereum wasn't, right? You'd say it was like tongue-in-cheek, half ironically or whatever. But then in 2022, it turned out everything was just a scam. Go on.
I can't comprehend how it got so bad so quickly this time around. Like the level of responsibility of like the supposed adults in the room has been very, very low, like equivalent of your average degenerate, yet with billions of dollars. And I'm having a really hard time comprehending that part of it.
Yeah. I mean, sure, like maybe like Celsius Mashinsky or whatever he's called is doing like really weird, fucked up shit, like way out in the risk curve, and 3 Arrows were fraudulently borrowing from everybody in the universe to add margin to their long position, their bad long. But how did all these lenders just give money to people? Like what? Like some of them like lost like 90% of book or something because like one client defaulted.
Yeah. So how does that work actually? So to lose 90% of book, you mean in terms of like what you actually have liquid funds wise?
Yeah.
Okay. Because it's not like it doesn't mean three. Like
just like it's like 3AC was like their only client.
That's what I don't know. It's like what percentage of funds lent out were just to 3AC. Like what percentage of their funds lent out was that one borrower?
Yeah.
I don't know what percentage of it.
I don't know, man. It's pretty bad. But Yeah, I mean, I don't know. What like do these people not have risk management teams? Like I worked at a bank for a little while, and we had a lending department, and there was like fucking 10 million people in a room trying to figure out if we could give out a $3,000 loan or not. And they like lock up your fucking every piece of data they can get about you from credit bureaus and shit to figure out if you're creditworthy. What did they do? Like, did they go, oh, Sue, I've seen his tweets. He seems smart. And I saw him on that podcast with that guy from Alabama. We'll give him $1 billion. We'll give him $1 billion.
You're talking about Trabuco, right? That guy from Alabama.
I'm sure they're good. I've heard they're good traders. They invested in Avalanche at $1. So we'll give them $1 billion. Like, what could go wrong? How much of the book is that? Oh, it's half. They're good for it, I'm sure. Like, what the fuck is going on?
I truly don't know. I think what's amazing. Okay, so people are crapping on BlockFi this week because there's been all the stories about BlockFi and FTX liquidity and all that. They seem to be, I mean, they seem to be the only one relatively solvent because they actually had 3 Arrows Capital collateral. Whereas it seems like other people 3 Arrows borrowed from did not have direct access to collateral, but had the capacity to margin call. There was probably some proof of collateral, but 3 Arrows used the same proof of collateral for multiple lenders. It appears. This is all alleged, I guess. And whereas BlockFi was able to liquidate the collateral, and it was originally over collateralized per the reporting by the Block and CoinDesk and whoever else is talking about this stuff. So say they borrowed $1 billion, they had $1.3 billion of collateral, but then they couldn't liquidate it fast enough, it seemed, because GBTC was a big part of it, and that was too illiquid to dump. You can't dump hundreds of millions of dollars of GBTC. So they still managed to lose money on the position.
Yeah, so that's what I don't get. There wasn't one person in the company who did the mental like thought process of what happens if the price goes down? That's the question they need to ask. What happens if the price goes down and this gets licked? What will happen? We'll have to sell this thing and we'll have to sell this thing. Can we do that? No. Shit. Should we maybe add some like liquidity premium to this like form of collateral? Like it's not even like it was this really deep, like weird niche technical like problem or something. It was just there's no market for the thing we accepted as collateral. I don't get it.
Yeah, and theirs is like the better of all of these, right? If the others didn't have the collateral at all to liquidate, they were just gonna have to say like, "Oh, please give me the collateral so that we can liquidate you." You know, like reputationally, they were treated like they were, you know, whatever AAA credit quality, and in actuality, they were highly default worthy.
Yeah. So do you reckon anyone gets on collateralized loans anymore? Is it just Alameda?
No. I mean, I guess Alameda is probably one of the ones lending, not maybe they're borrowing still, but I don't know. I mean, as far as I've heard, at least, it seems like everybody who was lending, a lot of those loans were essentially perpetual. It wasn't like defined terms. So take Sailor, for instance. Everybody's talking about Sailor's capacity to get liquidated, but his are like, okay, you owe us money back in 8 years or something like that. Whereas a lot of these lenders, it was just perpetual. So they can simultaneously leave it open forever or call it at any time. So if you've borrowed $1 billion from, say, Genesis or BlockFi, let's just keep it with BlockFi. If you borrowed $1 billion from BlockFi, your $1 billion loan was always possible to just stay there, or they had the right at any point to say, give us that $1 billion back. But if you've got that $1 billion tied up in a way that is not as movable, not as liquid, in what it probably maybe not even leverage, but in like some other stable operation or whatever, and you can't move it for a while, then like all of a sudden you're on a capital crunch, and that's just on repeat all over the place as a lender was calling in these loans, and the borrowers are scrambling to make it work, and that that's creating this liquidity crunch, and nobody has any money to buy Bitcoin, so we just go down.
Yeah, I don't know. I just feel like there's just been like everything that happens just seems to be like the result of like a completely stupid decision. Like the CoinFlex thing with allegedly Roger Ver gets liquidated.
RVUSD.
Yeah, but they don't liquidate him because they have an agreement with him to pay back.
Or can they liquidate him? Did they run negative on that account?
So their statement said they had an agreement with this person who was of good standing, and they wouldn't ever liquidate him because he'll just top up the account or pay it back or whatever. But clearly didn't have a plan for if he didn't do that.
Yeah.
It's like, what if he doesn't? It's like it's not even like multiple order of magnitudes depth of thinking. It's just like, what happens if the bad path happens? What happens if the person does not do that? What happens if the price goes down?
Yeah.
Like they're not
Well,
they're not like, they're just simple questions. And it seems like every one of these like major losses or major fuck ups would have been prevented with someone answering some simple questions and going, should we cater to these things? But maybe those are the lenders, or those are the people you don't hear about because the people that asked the question didn't lend out any money and therefore didn't have active businesses or something.
Yeah. And I wonder too, like, does it make it different if, Bcash has been going down for a long time. So if Roger was consistently, using leverage with Bcash on CoinFlex, which was a Bcash friendly exchange in the first place, if I recall correctly, like maybe he posted collateral 5 times in a row, and so they thought it was okay. And then it's like, hey man, your bill's getting a little bigger here. You're underwater pretty bad, and now he rugs them on the 6th time. That seems like a reasonable outcome as well, where your risk, it could be all right up front, and it's like, okay, it's 10 million, we have $20 million in freestanding, insurance fund money or whatever you want to call it. So it's like, it's all right. And it's like, hey, now it's 20. Hey, now Roger, somebody call Roger. Roger, hey, you owe us $30 million. And then all of a sudden they realize they're totally screwed. And now what? This is, again, all speculation.
Yeah. I mean, who knows, man? It just seems all pretty stupid. Roger, I don't remember if this is real or not, but in my head, I had that Roger had 400,000 Bitcoin. Like when I first heard about Roger, when I got into crypto, he was like, Bitcoin Jesus or whatever people called him. And he was on these lists of people that had like loads of Bitcoin. And I remember Max Kaiser had like 250,000 Bitcoin. Whoa. And Roger had 400,000 Bitcoin. And like, who knows? These numbers might have been made up. They might be fake. Like, who knows? But if he had 400,000 Bitcoin, that was 30 billion at the top. Obviously, he went all in Bcash, and he will have sold some along the way because it's a long journey if your entire net worth is in a fictional internet coin. But it's pretty crazy, like outcome variance, isn't it? From like 30 billion in December to like getting liquidated and can't post margin for a $47 million Bcash long.
Well,
this week.
Surely he was liquidating his Bitcoin to try to prop up Bcash along the way. You think he would have?
Yeah, possibly.
Yeah.
I remember he tweeted something. Oh, I don't remember exactly, but I remember there was like a point where he bought 20,000 Bitcoins worth of Bcash.
Yeah. I mean, nobody had to wonder very much back when those Bcash like vertical candles like plus 40% in 2 hours. Like nobody really wondered where those were coming from. So they're probably just mass conversions from his Bitcoin stash to Bcash.
I'd love to see a Bitcoin Satoshi's vision to Bcash chart. I just don't know what it'll look like. Which one's down the worst?
I don't know. We can look it up. I'd have to mess with some stuff here. I was just playing on a split screen, but we can try it if you want me to rug the.
You've got to imagine that like BSV was down the worst, and then in the last 3 or 4 months, it's like massively outperformed Bcash. That's why I'm guessing like BSV down like Celsius chart, like
it was already at
down
zero. it was already at zero. So on a relative basis, it's still
yeah,
at zero while Bcash goes down. So do you think that they distributed this? They did it's kind of like what Bitfinex did after the hack, right? With the simulated coupon for $1, and CoinFlex did the RVUSD. Do you think they did it because they were insinuating that it was a Roger Ver debt coupon?
They must have been.
Yeah.
Recovery value USD. That's no one talks like that. It's got to be Roger Ver USD.
It's probably the best marketing they've ever done, showing off their $47 million exchange deficit.
No, they sponsored Doug Polk's Screamers.
Did they
YouTube
sponsor
channel
Doug?
too.
Oh man, I bet Doug feels bad about that because he loves staying on the straight and narrow.
Yeah, his content's quite funny. I watched it. And
Doug's great. Somebody in the
yeah, so who knows? But it just seems pretty stupid, to be honest. Like, I don't know, like when you have like dog coins and stuff, it's like it is embracing the stupidity at least. But a lot of the like people that have blown up, or the projects that have blown up recently, they were like doing this like pseudo smart, pseudo intellectual, like hand wavy thing, and they like seem to sucker in a lot of people that were actually like smart too. And you know that Fat Man Terra guy who's like doing all the like sources, I made it up stuff?
Yeah.
So he was like a researcher on the Terra forum. Like, what were they researching?
I don't know, but now he's just taking like the craziest rumors and random DMs people sends him, and he's just publishing them. Like it's exclusive,
I think we should make one up now, and we should all get everyone to leak it to Fat Man Terra over the next couple of hours. It's a very credible rumor. Like Loom Dart has been arrested in Dubai.
Wasn't that
We're
one
not
of them?
sure why, but we think he was margin trading for Celsius, and he stole the money, and that's why Celsius is closed deposits because of Loom Dart. But everyone do a little variation of that.
No, I think it's Gainsey, margin called by DoorDash. His credit line, $1 million, DoorDash has been called in and he won't pay it.
Why did Loom Dart move to Dubai? Was it because he was planning this Celsius heist?
So far, everybody in Dubai is a scammer. That's every time you hear about somebody going to Dubai, it's not good. So, Loom Dart, speak for yourself. Tell us what you're doing.
I reckon you can. Let's just all spam Fat Man Terra Loom Dart related rumors of varying severity. The person who gets their rumor qualified on the feed wins, and if you get it onto a Bloomberg terminal, then you get a prize.
First, you have to look. You have to look the audience in the eyes, and you have to say, "I am not Fat Man Terra." You can't do it.
It's got to be someone's alt, right? Like it can't.
It's
be
yours.
It's not mine.
I think
you can tell it's not mine because it tweeted all the way through Glastonbury.
How was it? I don't even know what that is. It just sounds very bougie.
You go in a field in a tent, and walk around a lot in the dirt. Wake up feeling like shit. Try and recover by the evening before you feel like shit again.
Well, we call those a rodeo in Alabama.
Yeah, it's a rodeo.
It's a rodeo?
Yeah, Glastonbury, it's a really big rodeo.
But not like with animals. What is it?
What's
Music?
a rodeo?
I mean, yeah. Is it music or what's the source?
Yeah, it's a music festival.
Okay.
Wait, what do you mean with animals?
A rodeo is like you lasso, bulls and stuff.
Have you done that before?
I've been to them, of course.
But you haven't done the lassoing?
No.
Is that like your kind of entertainment? Like, and
No.
You finish these podcasts, it's like Friday tomorrow, innit? So you
going on down with the rodeo.
You get the kids all settled in bed, babysitter over, and you and your wife go out and lasso some bulls.
We need to lasso some bears is what we need to lasso. No. where I live, there's not a lot of rodeo action, but I went to Auburn for college, and there's like several organized rodeos that people rent trailers and drink beer and watch rodeos, and some of the people participate. Those are pretty fun. That's a very Alabama college type
I'd watch a
thing.
TV show that was just like you going around your life, I think. Like if it was on Netflix and it was just you going about your normal day and narrating what life's like in Alabama for a regular guy.
I'll tell you a story.
I'd watch that. I think it'd be pretty good.
I'll tell you a story about me at a rodeo. I got rugged at a rodeo one time.
All right. I don't know if people were listening before, but I've got COVID. So people keep saying, am I depressed? No, I'm just dying of COVID.
Yeah, and if I need to turn my volume
Also
down to make up
depressed.
for Cobie's depressed COVID voice, then just let me know. I'm trying. All right, so I went to this rodeo in Auburn, and you bring your coolers. You're on the back of a trailer, hanging out with your friends, listening to music and watching people be idiots, trying to wrangle bulls and stuff, ride bulls and lasso. What do they lasso? Calves. And I thought I broke my cooler because I stepped on it. And then it turned out and we left everything there, left my car in the parking lot a few miles away, and then realized I had left my keys in that broken cooler. So I go back, and my keys and my wallet are both gone. They're no longer in that broken cooler. And I'm annoyed because I got to replace all these things, my license and my credit cards and my get new car keys and all that. Like a month or two later, one of my friends comes up to me and he says, did you happen to lose your license? And I was like, yeah, about a month ago. And what had happened in the meantime was that somebody took my license and then robbed someone's house and planted my license as evidence. And it was like my wallet was still muddy. It still had $1 in it. They didn't even take I had $1 in cash. They planted it at this person's house while robbing the house. And then this person looked me up on Facebook to see if I was sketchy, and they realized that I was associated with this other guy. And so then I had my friend questioning whether I was robbing people's homes, robbing people's apartments.
Imagine when they looked up and just saw your face, your round smiling face on your Facebook page.
On Facebook.
You're like, it was definitely this fucking
guy.
prick.
Definitely,
It was definitely him.
Stole my blender. Yeah, so that's how I got rugged at a rodeo. But rodeos are fun. You would enjoy it. It's just like ultimate people watching.
I'm not sure. People like stealing your shit so they can go steal houses and plant you as evidence of them. I don't know. I don't know. All right. So what are the main things that have happened since we haven't done these episodes for ages?
Well,
we
should
every time we did an episode, the price went down. So we're like, we better stop. And it didn't help. So
but it's a good thing our episode with Sam got rugged by me. Because we've topped everyone that's ever come on up. Only we can't afford to top Sam. He's the only one standing.
Has anyone ever come on this podcast and their careers got better afterwards?
You know what? CZ, somebody said maybe. The entire chat saying no. The list of people. Jim. What about Jim?
The thing is, the longer the curse takes to play out, the worse the punishment seems to be. Like Sue was the second guest ever, or the first guest ever.
Yeah.
So it was like January 2021. So it was 18 months.
His was the first real interview, not like a panel.
Yeah, and before that there was only two, right? And one of them we didn't know what we were doing.
Yeah.
Yeah. So that took 18 months, and the size of the curse, he was just it was maybe it's like Final Destination. It's coming.
Yeah.
But if you avoid it, it just gets bigger and bigger and bigger. And now, because we had him on the podcast in January 2021, the entire industry's dead.
Trabuco, somebody said. Trabuco is definitely a winner thus far.
Oh, yeah. Also, maybe we'll find out some dodgy shit soon. Who knows? The way things are going, if he was on the news tomorrow...
Fat Man Terra is typing this one up. Rumor, Sam Trabuco down bad.
Yeah. So I don't know.
Somebody said Ansem, but I don't know. I think he's done all right, but he took a reputational hit on the Jewel stuff because he was repping Jewel pretty hard and it got rugged. And not got rugged, but might as well have.
Yeah, he also had to do the difficult second album, right? Because in Q3, was it Q3? He wrote like Q3 thesis and like
Yeah.
everything came like perfectly true.
Yeah.
Then he came on Up Only, and then he did the Q1 thesis and everything did the opposite.
Yeah. Somebody said OBJ because he then won a Super Bowl, but he also got traded and tore his Achilles. So I don't know if I'd count that either.
Mm.
Somebody said KSI, but he lost everything that he put into crypto, so that doesn't count.
He put quite a lot of money into Luna on the way down too.
Really?
He put like a couple of million in when Luna got to like $5 or something. And then it was obviously like $10 by the bottom.
B-Band.
Yeah, Flood, that like the kid that came on,
right.
has now been on twice. I think he did all right, but then he went to work at Delphi. So
Wait, after that?
after the first episode, yeah, he got a job because the
first
thought he was
episode.
smart
I
on
see,
the first
I see.
podcast.
I see. Yeah. So
Keen exec, is he dead?
no, he's just on summer break. You know, he's just living the dream during high school summer.
Raul Palo, whatever he's called, he longed the top of ETH and then got wrecked as well.
Yeah.
Who knows? I mean, yeah.
What about Vitalik?
There's two. Oh yeah, Vitalik too.
You know who got bad was Charlie Lee. Like that was mid bull market, but it topped Litecoin like to $1.
It's way too early. It's like March 2021.
Yeah.
Yeah.
It was bad.
I'm sure Charlie's doing fine.
Yeah.
He didn't even own any Litecoin at that point, did he? He sold it all at the top in 2017.
Yeah, that's
to
true.
avoid conflict of interest. So I don't know. There's two conclusions you can draw from this. Like people come on this podcast and they die afterwards, or the lifespan of anyone doing anything in crypto is reasonably short. And if you're risk tolerant enough to have some notoriety and, you know, people follow you and, you know, it's interesting for people to watch an episode of you, then your risk tolerance is probably going to kill you at some point.
Also, the louder a community begs for somebody to come on Up Only, the more likely you need to sell everything. Like Solana,
that is true.
Solana local top. People were begging for us to bring on. They were so mad that we wouldn't bring on Do Kwon. It wasn't even that we wouldn't. We just didn't, and they topped him anyway. But the louder they get, the closer to the top they are, for sure.
Yeah, I think that's definitely true. There's been a lot where it's like we finally go, oh, fucking hell, Jesus Christ, they're not going to stop tweeting us. Okay, we'll message the person, and then the next 3 days it's just like down 98% or something in a single candle.
All right, fine, we will have Tetranode on for episode 2. All his coins go to zero.
Yeah. So I think that is true. That's some secret alpha. We can just see who's been begging. Well, it doesn't matter anymore. The markets are dead. We can't use it anymore. It's gone. We figured it out too late.
We have to change when we think it's the bottom. We got to change the name of the show to properly like down only or if only or down badly or whatever. And when we actually change the name, that can mark the bottom, like in iTunes and everything, everywhere.
No, we just start using the up only intro again.
That
is my favorite gripe at the moment. Is I get a lot of tweets of people who are deadly serious, or like a comment somewhere. They're deadly serious. They're like, they call it up only. They're just trying to get people to buy the coins and saying they only go up. Have you seen the show? We don't just talk about how things are going only up. It's like it was a joke from the start of the bull market.
Have you ever talked?
We didn't think we were going to do a podcast. We were just like, we'll name it something for a little while. And they get really upset about it. Like, why have you called it up only? Markets go up and down. Look at them now; they're going down. Like, they're genuinely upset. I'm like,
we could bring back Token
we'll
Talk. We could bring back Token
change
Talk.
the name if you. I mean, you don't watch the show, but we'll change the name for you if you're getting upset about it.
Have you ever talked to anybody about somebody says like, oh, what's your podcast name in real life? Or do you try to?
Oh no, definitely not.
Okay, yeah. See, unfortunately, I've had those conversations, and they'll know that I do some kind of podcast and something. They don't watch it or anything, but they're like, "Hey, what's the name of your like crypto thing, podcast thing?" And I'm like, Yeah. It's called up only. It's it's mostly a joke, but it usually goes over very poorly. They suddenly like realize I'm very low IQ, and just like riding this wave.
Well, if we remove the word up, and then add the sponsor instead, like it was FTX BlockFi for a while. It'll be FTX only, which at the moment seems to be the state of the industry because everyone's dead or they're buying them. So we don't really have to change much. We can just delete the up.
Rect only. That's a good one.
Or we could maybe sell to, there's rumors that BlockFi is going to sell for 25 million.
Yeah,
and everyone thinks it's cheap.
We will also
sell for 25 million. We'll sell to Sam. Anyone?
Sam.
25 million.
Sam.
25 million is cheap. Everyone's saying it online.
Let's
That's really cheap.
line.
We'll do it.
25 million. That's all it takes. Easy, right?
Do it for 10.
Hey, what kind of negotiating tactic is that? You can't go from 25 to 10. It's the worst negotiating I've ever seen in my life.
Look,
But we will
desperate times.
for 10.
Desperate times and desperate measures. Yeah, the BlockFi CEO tweeted that 25 million isn't real, apparently. So it's going to be interesting how that one plays out.
So far.
Yeah. So we're definitely not selling for 25. We're selling for 20. Who knows?
In fact, the option was for $0. So that was reported on. I think the block added the $25 million, like, I guess, execution cost of that option, but the 250 million in liquidity was in that Morgan Creek call that CoinDesk reported on, and then the option to buy if they default or can't raise their own equity to replace that 250, whatever, would kick in and enable FTX. My question for you, okay, if FTX, let's say they lose like 100 million on the debt line, right? Like that's what it costs them essentially in paying out all those customer issues and whatnot. Plus the $125 million. Good buy, bad buy. Even at that, what do they gain in that situation? Do you think that's a reasonable outcome for FTX?
It seems like it's worth zero, right? It seems like Sam is, for reg purposes, maybe reputational purposes, bailing out a bunch of customers that use the service that look legitimate. Like I think Sam's doing a lot of work in like DC, Washington, trying to cozy up to regulators and paint a better path for either the industry or for FTX. I'm not sure. And I think a lot of this blow up stuff like undermines maybe what he's been doing. So like internal industry bailouts makes the industry look a little bit better, I think. But it seems generous to like buy it to even do the loan, right? Seems generous. I wouldn't do it. Can't afford to, but I wouldn't do it if I was in his position. But yeah, I mean, I don't know. I don't know what the state of the business is. I don't know like what Sam's plans are. I don't think you get anything valuable. I think that's basically a zero now, from my understanding. But
you don't think there's like you get those customers? They're all wrecked, I guess. You get the regulatory efforts that BlockFi had put in for like state by state access to customers. Get maybe some, I mean, I would say some degree of technology, but not really anything that can't be rebuilt. It's a lending thing, which they already had. So I still think it should be like, if you can say BlockFi survived, right? They did everything they needed to do, but I think the hard part is that they were so close to the line of not surviving that it does hurt like reputationally it's bad enough to where.
But isn't the business model dead?
Lending and borrowing of crypto?
Every single lender got major wiped, and the only reason the yield was possible is because 3AC were accepting any interest rate so they could add to their long. Like if someone's not doing that, then.
So you're saying lending and borrowing of crypto is dead as a model?
No, this like will give you a 10% yield
Yeah, but there's an inherent dynamic. There should be this I think is dead. The static yield, right? Like the 6% or whatever, like the rate that they just advertise, versus like Aave, for instance, is a dynamic yield product, and the free market is enabling a lend and a borrow side. The collateralization is in the formula, but a centralized version of that, like make it a little easier on people, but be very similar in style. Do you think that could work?
I don't know. Maybe they get some out of the licenses. I don't know.
I think there's definitely a market for lend and borrow of all forms of like crypto dollars, the relationship in between, where people, they'll borrow on that platform because they have access to credit that they wouldn't have access to elsewhere. And if they're well collateralized or whatever, like it can make sense. I think the business model is not dead. I think the like tell retail come earn 8% yield on your Bitcoin, like discovering where does that yield actually come from is a hard question to answer.
Yeah, I mean, yeah, I don't know. Like the yield always was just like two things, right? Like fake token printing, just inflation of some project, or people were borrowing. But like maybe it was clear to other people. I don't do a lot of like this weird borrowing shit that everyone apparently does, but I didn't realize how much of the borrowing industry was simply one client. And
do we know that it was like? I mean,
yeah,
they were lending them $1 billion,
I mean,
but did they have
all the rumored like losses from versus how much like assets these people are claiming to have seems reasonably outsized, at least. But
I could believe if it's like 20 or 30% of their of what they had lent out. So if they, maybe they had $3-4 billion lent out in total, and 3AC was like 20-30% of that with whatever they were borrowing. I could believe that. But there's other big firms out there that do a lot of active stuff that requires, for one reason or another, asset borrowing.
Someone in the chat said, "Remember when Cobie and Ledger gave Suzy a platform?"
Yeah, we need to talk about that.
Yeah, well, it was on the podcast twice.
Yeah,
January 2021,
and Kyle was as well.
Oh yeah, Kyle was on as well, and Arthur was on, but Arthur's like under the same umbrella. I guess like who knows how that works actually.
I don't know. I think he got pretty freaking rugged by him. So
yeah, I think
that's
it seems
quite
like
different.
He got fucked over. So
yeah.
That sucks for him. Maybe we should invite him to come back on.
Man,
one day.
That his like, you remember his diamond hands pose? Like it's gonna be seared into my brain. Sell it all right now. So I think this is like super hindsight critique stuff, right? At the time, 3AC was well regarded by everyone. Obviously, like we had someone on a podcast. Well, someone else lent him $1 billion uncollateralized.
Maybe they only lent him the $1 billion
because they were on the
podcast.
Because he said super cycle on our podcast.
Yeah. Well, the super cycle was already a thing before the podcast, right? That's why we asked him on the podcast, because the super cycle meme was like very popular at the start of the cycle. And the very first question, I watched it back the other day because I wanted to go see if he said anything funny in hindsight. And the very first question was like, what if the super cycle is not real?
Oh no.
That was the first question we asked and spoke about. And it's also not really even clear like when they turned fraudulent, right? Like they might have been a successful outfit doing everything above board. They made a bad long, and then they coped with that bad long by borrowing fraudulently and creating a terrible situation. So like come this year they started like sequentially fucking up because they made a really poor losing trade.
Yeah.
Or maybe they were acting, you know, dishonestly the whole time in the background, and like people didn't know.
That's
the only like insight that I had is that people thought 3AC were dumping on them, right? They thought they were like shilling psyopsing
They
for
were.
exit liquidity was the meme. And I thought that was not true, because when Sue would often DM me to ask questions about specific market things, like what do you think of the Bybit fundraise, or what do you think of this thing that's happening, he would also share his thoughts, and it was always basically the same as what he was saying on Twitter. So either he was also like shilling people in private for exit liquidity, which given the recent revelations is potentially also true.
Yeah.
Or he was just talking his book, and you know, it would be dumping when he was bullish and he was euphoric at the top or whatever. So like the unique insight I thought I had was that he's definitely not psyopsing for exit liquidity. He's maybe just slightly bad at trading sometimes. But I don't know if anyone, maybe there are people that thought they were like borrowing fraudulently and building like a massive illegal long, but
so
I didn't read anything about that anyway.
I think there's a reasonable chance that they were doing sketchy stuff via leverage earlier, and this is why. I don't know how, like they started their FX shop, right? They said with $1 million or something. So can you do
2009?
Yeah, whatever. And then eventually, let's say you get like 10, 20, 50 million, whatever. Turning that into 18 billion on your book at least, but like $5+ billion liquid in some capacity is really crazy. At some point, they definitely made a fortune on the consistent GBTC arbitrage when there was a premium. If you can remember back when, not that long ago, there was a premium on GBTC, and that was legitimately free money for the people who took advantage of it, as long as they understood the risk that premium could go away. And I think where they could have gotten in trouble is that they overstated their collateral for getting the leverage to perform that premium at significant scale, which allowed them to scale to a size that then was real, but they did unethical things to get there. Like that's my speculation, right? Like, let's say you've got $50 million to make that arbitrage play, and you like 10x lever that one play, and then you're cycling 500 million through that arb and using your profits as they roll in 6 months later to do your venture bets, to do your liquid book stuff, to do whatever else you're doing. And that is a way, in my opinion, to play the arbitrage to such a degree for like a year, 2 years, consistently rolling that leverage in a way that scales your total book size to that point. And that's what gives you the liquid significant sum of money, right? Like maybe even low billions. And then you put it in, you know, shitcoins and stuff that get marked up 10x what your price is. And that's why you end up with 18 billion total and a few billion liquid or whatever. And then their tides really change when they now are tied in for that leverage. They've made a lot of money, but they're tied in for that leverage that's now at a discount. And when the discount gets worse and the discount gets worse, but then the price starts going down, and rather than before, price was still going up. You're protected in your over leveraged Ponzi discount to, you know, arbitrage while the price is going up. Price goes down and the discount's steeper, your whole thing starts to fall apart. And that would make sense.
A simpler version is just like they were borrowing a lot of money from people to buy things that outperformed, and when the market went up, it worked. You buy dollars, you borrow dollars, you borrow Bitcoin, you buy some other shit, you're on extreme leverage that, like, you know, like exchanges wouldn't give you directly on the platform or whatever, because you don't have the collateral to back it up or whatever. And then stuff goes up and you make a lot of money, and then you get into the mindset of doing that a few times so that it feels normal, and then you do it once more and you die. You know, if you do that, if they did that once on the way up and it worked, they would have no hesitation about doing it again, because it was a victimless crime the first time. So
I think
I don't know.
I think
What I find interesting is if you I listen back to like Kyle's and Sue's things, and then I have a bunch of notes from like a ongoing document of like stuff I write down and like try and read more about it later. And a few things like in there are like tweets that Kyle wrote, and like all the stuff they did seems just in massive contrast to like this like these philosophies that they were preaching. I remember Kyle in the May crash, post-May crash, had tweeted something like times like this is why it's important for 3AC to keep like 70% of the portfolio liquid, and you know, not do too much venture, even though it's like attractive in crypto. And then at the top in November, he was tweeting, "We've done more venture than ever before. Like the last 6 months, we've done more venture than we've done in the last 10 years."
Well,
and they obviously completely abandoned those principles.
Was that percentage of their liquid?
I do think they got a bit money drunk as well.
Was that because it was a percentage of their portfolio, or was it because it just marked up so much? Because, I mean, look at some of the stuff. If you got pricing, let's take Avalanche for an example. I don't know exactly what their deal was on Avalanche, but it went to like $150, and it was reported that their cost basis was in the single digits, right? Like a few dollars, and maybe it was maybe they did that deal when it was like 15 or 10 or something. You know, they get a 50% discount, let's say. And then it marks up 10x from the mark price. So you're 20x on a significant position, and you can hedge that position out and all these things. But your mark price is extraordinary, but you can't exit. Sue actually said something, I think it was on Uncommon Core one time, where the way he thinks the market of the market is a very small door and a lot of very fat people trying to get through the door. And that was essentially how the price plays on the edges. And in that example, like they are the fat body trying to get through a very small door for real liquidity on an altcoin play, even a big and liquid one like Avalanche. It doesn't matter if you're that percentage of the book, the price action is on the fringes. So your ability to realize your gain despite marking it up 20x or more is not as good as it looks. Like you're at the end of the day, it's going to be much harder for you to actually get out of that. And I think we saw that in a more positive way. Thank you, Crypto Cabbage. 2 ledgers, 1 door. I think we saw that in a more positive way, but like realistic with Solana, right? Like the Solana unlocks of early days was a bullish unlock because, you know, Solana changed hands to people that believed in Solana at the early parts of a bull market. Late parts of a bull market, and those like new deals start unlocking, and Solana is going down because people are exiting positions that are in extraordinary profit, and only so many people can exit. It's like an elevator because there's just not enough liquidity, even though it's a really big coin with a lot of trading action. But it doesn't mean that they can all get out at 250 per soul. You know, like only so many people can get out that. That's what those distribution zones, that's why they look that way. And when you mark something up 20x, 50x, 100x in your book, well, then you're going to be a big piece of that pie on the unload. So if it's down 50%, 60%, 70%, you're still unloading because you're still up a ton. And you just know you'll never realize it in its complete value unless it maintains pricing that you're satisfied with for years.
Yeah, I don't know. Well, like I obviously don't think we could have figured out that they were doing a bunch of fraudulent lending and therefore rejected their podcast appearances at the time. So I do think it is massive hindsight criticism, but it does lend an interesting question. Like if you do a crypto podcast, it feels like it's the only type of podcast where you can't talk about the subject matter or with people involved in the subject matter because like who knows what any of them are doing. Like you avoid having project founders on because it's like shilling or the top. You avoid having what are seemingly decent performing fund managers on because they might be doing illegal borrowing in the background and nuke the entire industry. Who can we have on? We're just Gary Gensler. Let's get Gary on. every episode we'll just say, Gary, what's a security? And then he'll just talk for ages.
That's,
like the Sailor episode where we didn't say anything and he just spoke about Bitcoin.
You're hindsighting too. I don't think we approached it in a wrong way at all. You know, no regrets. But I think my shirt went down a little further than it should have there. I think that approaching funds, everybody knew they had a book value. That's gonna be so bad. I should have thought of that. Everybody knew that they were speculators, right? That they could win, they could lose, they could be doing things crazy, they could be super degenerate. We don't know. We didn't know. And we have biased ourselves towards traders and funds are traders, more so than like the coin side of things. Like if we bring on Charles Hoskinson, what's he going to do? You know, he's going to talk about Cardano. Really nice booth at Consensus, by the way. I noticed that the booths at Consensus were like inversely correlated to the quality of the project. And you know, we largely avoided it. Whenever we agreed to bring on someone from a project, one, it was probably the top because that was when they were the loudest about their community, like we talked about. And then two, like you pretty much know what you're getting from them unless they essentially agree not to talk about their project. Like we had Kane and Stani on, for instance, from Synthetics and Aave, and they talked about crypto. They weren't shilling Aave or Synthetics. They were just talking crypto. And I think that is a really, really interesting way to bring on someone from a project. But bringing them on to talk about like, oh, what's the future of Synthetics? Like, I don't really care. You rugged again. What are you doing?
What's up?
No, there you go. You unmuted.
Oh, I do think there is a benefit for the lack of froth in the thrill stages of a bull market, like to now. Now, if we mention a project and say it's going to go up 10x, no one's getting any money to buy it. We're not like we're clearly not shilling for exit liquidity because it's fucked. Like no one's watching and no one's going to buy anyway. So I do think in times that are not the thrill stages of a bull market, you can actually speak a little bit more about interesting things happening in crypto because they're detached from, like, the interesting stuff is not the price anymore. Like all the prices are going down. Like really, really, really interesting, credible, good projects are going to zero because everyone's selling everything. Like, you know, BlockFi was seen as one of the good crypto businesses, like one of the ones that was trying to be like more of like a Coinbase, and their valuations allegedly down 99% or something.
Yeah.
So like
they didn't have a token
across the board. with
it's supposed to go down 99% when you have a token.
Yeah. If I was BlockFi now, I'd just go fuck it. Let's launch a token. It's the Hail Mary.
Dude.
Yeah, that's what I do. I just fuck it. Right, how much are we down? Let's do Roger ver USD for BlockFi.
Yes.
RVUSD, let's do it. Why not? Fuck it. But I do think, yeah, you can talk about stuff now. Like you can talk about, I don't know if you saw on the Maker governance forum, you probably didn't. You don't go there, do you? Yeah, there's like a proposal for like real world assets on chain, and like it's a bit permissioned. I think you have to like pass KYC to get into these pools, but they have basically a tokenized SP500, and it's like a real company that does this like properly wrapped real world asset and puts it on chain. I think that's actually quite cool. There's been times like where I would have just sat in stock market exposure instead of cash, but I just don't know how to do that because I've only ever invested in fucking fictional internet coins in my entire life, and I don't know how to buy the stock market. Like I don't know what the fuck to do. So I think stuff like that starts to be quite cool. And I think if it's a bear market, you can talk about them. Where if it's a bull market, everyone goes, do we buy Maker? Buy Maker? Buy Maker now? I'm buying Maker. Cobie told me to buy Maker. It's gone down. Cobie's fault. So I do think that is one benefit of like, you can talk about crypto a little bit more and the people that are doing stuff a little bit more when there isn't that like froth around. And you can also talk about like the stuff that's stupid and seems unsound without getting like turbo mobbed by the founders and their minions, because suddenly you're not a scheme to that missed out on buying the bottom or whatever. You're not jealous. You're just talking about a thing. Like most of the stuff, I got a bit lazy this cycle, and like in previous markets, I really did the grind. Like I would know everything about every project. I would be on top of everything that was happening and know it inside out. This time I was like, if I don't care, I'm not looking into it. I'm just going to ignore it. I'll know roughly what it is and what they're trying to do, but if I don't think it's super novel and maybe I'll miss out, whatever. And all of the ones that I've looked into, it was a like fundamentally unsound scheme. Like the other day I found out that Bancor's like impermanent loss protection, they just print tokens infinitely. Like there's no cap. It's just forever.
It's ultrasound
They'll
money.
just print new equity forever to offset the loss. So it's like, imagine if we did an exchange, built an exchange, FTX2. Except if you make a losing trade, we'll print new tokens and give you them to cover your loss, so no one can ever lose. You either win money or you get tokens to cover your loss. That's basically what the scheme is. And not only is it unsound, obviously it makes the token design go to zero, like as part of the design, but you put all the governance into the hands of the shit traders. You give the governance to the dumb people, because the dumb people are losing the trades, they're getting loads of impermanent loss, and they've been given loads of your governance token to make decisions about the protocol for losing.
Well, the thesis there, they weren't the traders, they were the liquidity providers.
Which is a type of trade.
Yes, but the people utilizing that liquidity was people that were willing to route their trade through Bancor, but not LP for Bancor. So like if you were the person saying, what's a pool, like Aave USD, and there was a Bancor position for it, well, that's going to be included, for instance, in like Matcha and 1inch and aggregators. And so your Aave USD pool will be fulfilled. Like the LP provider is someone that holds Aave, but then they're like, oh, but I want to hold some in USD. They get IL badly because they get more and more dollars as the Aave price goes up, and the IL protection is printing Bancor. So Bancor is always the victim in that scenario, but that's not necessarily a trader. It's the person that thinks that this is some novel and genius idea, and that it'll somehow accrue value to Bancor itself because the fees make up for the IL. But the IL is going to be inherently part of the system because Aave is not supposed to trade in line with USD. Now, if it was USDT versus USDC, sure, but that's how like curve type stuff works. If it's two things that are supposed to be counter to one another, not synchronous with one another, then it doesn't make any sense, and it goes to zero.
Yeah, it is. Yeah, I mean, yeah, and there's a lot of them. Like, there's a lot of them. We just print tokens was the solution to a lot of stuff.
Do you think Curve fit that scenario, or do you think Curve is legit, like in terms of the way it was modeled?
I think that you can print tokens with a cap. So there needs to be a finite supply of something. Like if your system requires printing tokens to work, but the system is designed forever, then like the token supply trends to infinity, and the token price trends to zero, because the token will just be printed endlessly forever and increasing volumes as the price goes down. So like that obviously doesn't work. If there is, the reason I think you can print tokens, which I think was part of this like original yield farming thesis, was for growth. And I think a lot of that's been disproved now. Like I think like a lot of the growth is non-sticky, right? So you can do this program, you can distribute a ton, and as soon as your rewards go, people leave. Like people are not loyal to protocols. They're there for the yield, and then the people that stick around, people that lost their keys or died or whatever. But I think a lot of the growth stuff has been disproved, especially when people use it in excess. I think you can use tokens to prop up part of a temporary system. So if you're building something and in 6 months you need a band-aid for 6 months, then you can print tokens as a band-aid, and it's a good way to distribute equity to people that are helping prop up part of your system in the short term, as long as there is a design for a sound scheme that doesn't rely on constant dilution, because then just who's bidding,
which means fees, right? Like,
what do you mean?
Well, the sound system is fees.
Well, or eventually just something that works without you paying people to use it, right?
Right, but still incentivizes providing the liquidity.
Yeah, I'm thinking of stuff like Axie and UST, where like paying 20% for UST was a growth mechanic to raise demand for UST. If there's demand for UST, then it's like good for Luna, and it's a good growth mechanic to get people to like want to hold this thing that otherwise there would be no point in holding. Like, why would you want to hold a UST over a USDC? The only reason was for the yield. But then because this, like, you can make this scheme sound by making there be real reasons for you to hold UST, right? Like maybe the only way to pay for stuff in certain countries is to use UST. Then the scheme sound hugely ambitious and virtually impossible, but at least makes the scheme somewhat sound. But if you can't achieve that, then you just rely on paying people to use your product forever, which obviously at some point fails. And similar for Axie, which leads me to the thought that, like, Delphi will go back in time like 9 months, or maybe a year, I don't know, the golden boy sort of institution.
Tokenomics.
Yeah, and they're two things that they were like famed for was the Axie model, and they were betting really big on Luna, and they have thousands or hundreds of thousands, I don't know, of people that pay $5,000 or whatever to subscribe to their newsletter, where they write about their research, and like both things are Ponzi schemes. Like the Axie model is dead. Like the tokenomic experts that designed the Axie model is dead, and Luna went to zero in like 2 days, and then they launched a new Luna, and the old Luna outperformed the new Luna.
I missed the whole new Luna thing even. I mean, it just went straight to zero.
So I don't know. Like, if you did a state of the market type report now, or 6 months ago, or whatever, it would just say everything is so stupid. Like, it's so dumb. But on the flip side, DeFi 1.0, and maybe a couple of additions since then, is working fine. Like, you have all these lenders blowing up in the, highly credible DeFi 1.0 lending markets are like chugging away, no problems. They handle everything. They liquidate people.
Compound, Maker, Uniswap,
well,
Curve.
There's been a couple of things where the liquidation doesn't go through because Chainlink Oracle doesn't update fast enough on Ethereum, which is an Ethereum issue, not a Chainlink issue.
Trying to get through the show without Link Marines on us.
Yeah, it is an Ethereum issue from my understanding. I might be wrong. As I said, I'm lazy. I don't research too much these days. But so yeah, there's a couple of liquidations that don't go through because the person got really lucky. It wasn't below their liquidation price for over 30 minutes or whatever. But all those things are working pretty well. Yeah, sure, the governance tokens are in the dirt. They're going to zero. They've underperformed Ethereum since their launch. I think Maker has now. It's built like all-time lows or something.
Compound.
Versus ETH. But the products themselves are like reasonably sound and doing well. And maybe the way it'll work from now on is that in the bear market, people that are mission driven and have high conviction and think a open, transparent, decentralized, on-chain future is important to the world will build stuff, and then those people will add enough value to propel the industry into a bull market, or maybe just the Fed will make money cheap again. And then a bunch of people will flood in, bastardize it, copy paste their projects, put dog logos on them, juice up Ponzi scheme like incentives, and make a bunch of really stupid stuff, which eventually collapses the market in the other direction.
So if you think back to those, though, what makes them valuable? Most of the things that people mimicked or made fun of themselves, rather, they kind of knew, right? Like valueless governance token. Like, what are you buying? I'm buying a valueless governance token because it's valueless. Or TVL is a meme because TVL is a meme. Like that. Those were statements that were consistently said. Yet they were both for the purposes of governance for the token and the TVL as a primary metric were consistently advocated for what could give something value, when in reality, the only thing that has given tokens value is fees
Memes.
Memes, yes. But if you're going to like break it down to its core components, what would give it value would be its ability to earn revenue through fees and then deliver that revenue to token holders without a regulatory burden. And that did not really exist, right? Like the ones that delivered fees, the fees were not sufficient to justify the valuations. And even if they could do that, there was a regulatory risk discount. So if you had a clear regulatory environment and you had fee accrual that was paid to token holders, then you could have a fair valuation because you can expect current revenue, current fees that are paid to token holders versus potential growth of this technology concept. And then you can create a valuation like you would in the stock market. But we never really got there.
Yeah, I do think that I think that people will over time, pending reg stuff, come to terms with the idea of like protocol equity and like a governance token actually being ownership of a protocol. The thing I don't understand is like for some that's kind of true now, and for some it isn't. Like some places the revenue goes to like a treasury which is controlled by the governance holders, and some it just goes to the company that founded the thing. Like they just don't talk about it, like, oh yeah, like we'll turn on fees eventually, like, but they're just like raking it in. And I do think a lot of these things would be better designed and accrue more value if the reg stuff was clearer, but they're set up so that they kind of can anyway. And I don't really understand it when people go harping on about like, oh, when you turn on fees, when can we get revenue from this, et cetera, except if they just want the token price to pump in the very short term, like 1 to 2 weeks, because no like extremely early stage company does that.
Right.
Like Amazon doesn't like pay out dividends.
Right.
Like they invest in growth and getting bigger. And you see all these token projects whose treasuries have been depleted because they hold their treasury in ETH or whatever. If they've been just paying their treasury out to token holders the whole time, what happens then? Like you can't pay developers, so the project dies. And like maybe it's fine for governance holders if they get to sell before everyone else, but
yeah, I mean, it doesn't have to go to token holders, but a mechanism where fee generation is possible is important. Like, I think Uniswap's a good example of this, right? Like Uniswap, they don't pay out to token holders, do they? I mean, they don't even really have any liquidity mining rewards anymore, if I can remember correctly. I think they did for a while, but Uniswap does earn fees, does have that capacity, and they're just building this gargantuan treasury that they're paying out to $20 million at a time for education proposals or whatever that was. But they have like billions of dollars, or it used to be billions of dollars of treasury, and they are not They're not delivering it straight to token holders. Whereas like Sushi,
But look at chat here, like chat saying Uniswap token is absolutely pointless. Imagine if the Uni token did something, etc., etc., etc. Like, I think Uniswap probably has one of the better design tokens if mentally you accept that a token is protocol equity, protocol ownership. And if you accept that, and if that was true, it might not be true. Like, I don't know what has to change for that to be true. But if that was true, then I think it has a much better design token than a lot of other things. I don't like these gimmicks where they try and pretend like it does something, and integrate it into the fucking product in like a form of utility somehow, or like the protocol buys back the token to try and make the token go up. It should be like, if Uniswap is valuable and can generate revenues and stuff, then it will have a valuation and people will want to own it. And yeah, maybe one day they ossify even further and just print revenue to holders, or maybe they don't. Like, that's the same with Amazon, right? Maybe Amazon will eventually just pay you for holding it. Maybe they won't. I don't know. I don't know what people want the tokens to do. Like, imagine if Uni did something like, what do you want it to do? Get you, like, make you a drink? Like, it. I think you just need to see these things as proxy, like protocol equity, or as like a crypto equity, and there's a benefit to having those things be decentralized and owned by anyone and having like some decision making power. I think that benefit is very low because most of the people that own these things do not do deep analytical research into the quality of decision making, and I think there's a benefit of it directly being ownership of the protocol. Now, I don't know if any of these things will ever outperform Ethereum again in the future, and blah blah. But I just don't know what people want the tokens to do, and nor have I ever agreed with them when they've showed me like a good tokenomics design. It's always like, well, you can stake it to earn more, and when you earn more, it buys back and burns the token, and that makes the price go up. Plus, you can lock it up for a million years, which also might make the price go up. And they just focused on like weird tokenomics tricks to make the price go up, rather than figuring out a structure that allows to create a bunch of actual value in the real world, and revenue in the real world.
I think some of it is they don't know how people don't know how value accrues in the real world. Like, think of Apple, most valuable company in the world, $2.2 trillion market cap. They finally introduced a dividend, I think, a couple years ago, and that dividend for a company that not only has that market cap, but they're also one of the highest revenue producers, one of the most profitable companies in the world as well. Like, all of the above: market cap, revenue, profit. Their dividend yield is 0.67% annually. So if you are owning Apple for the dividend, for the cash flow on your investment, then you are earning 2/3 of 1%. That's not a very good yield on your asset.
Look, I'll take it in this market.
Well, yeah, but that's not a very good yield in your asset if you look at it relative to, say, CPI and inflation. So if you want cash flow, then you're therefore not prioritizing other things. And what typically happens in a stock is if you're delivering revenue and profit, but it's not going to dividend, then it's going to feed the bottom line on the market cap side of things, because the asset price itself can go up in a speculative manner. Real estate basically works in a similar way, except for there tends to be more yield because there's more risk. So in a real estate environment, like a high value thing, you may earn less yield annually. You might earn like 4 or 5% yield on your real estate. But it's a much more secure investment. Like, it's a premium property versus something that is
a good class bungalow.
there you go, good class bungalow, versus something that's like not in as good a part of town or whatever. It might earn 10% per year, but it's more volatile in terms of the total value. There's more risk inherent in the asset itself, but it might cash flow better. Because you're carrying additional risk. And those are real life assets. So when you're looking at something in crypto, you can look at it in a similar model, whether it's dividends and stock market caps, or whether it's harder assets like real estate that earn yield because of market demands and how they are represented there. You can try to analyze tokens in similar ways, but the ones that are like a Uniswap, for example, massive fee generation. They're not feeding it back to token holders, but they are building a massive war chest and the capacity to continue to grow. Like if they are building the future of the way trading and transactions are done in speculative markets, then there's tremendous value in that, more than whatever their current market cap is. Like their future value might be hundreds of billions of dollars, and therefore the dollars that they're creating in fee generation now are better spent innovating to create the next big thing to further spiral the protocol's value.
Yeah, I mean, I don't know how much Uniswap even earns. Maybe it's not much. Maybe they're not turning on the fee because people realize it's really small.
I thought they earned
like, wait, the APY is 0.0%? Great. I'm selling this shit. I was just waiting for this to turn on. Do you think we could meme into existence a stock split for ETH?
Yeah, I mean, like
1 to 100.
Well, the market's splitting it on its own. Doesn't even need to increase the shares. But yeah, I think we need ETH to be like $10. No, $1. $1. What do you got to do? 1,000 to 1 split. Right
I'm gonna say $10. You might get that anyway.
Too real. 1,000 to 1 split. That's what we need. But what's the supply of ETH to even know how to split it?
It don't matter. You just put it in a splitter. Do a contract called the splitter, and then you get new ETH out. We're doing the merge, yeah? Just add it into the merge.
Can we call it spleef?
No one cares about the merge anymore, so we can just delay it a bit and get some more ETH when you send it over.
Spleef.
Yeah, so we'll do the merge and the split at the same time. And when on the other side, everyone will be really happy because they've got 10 times more ETH.
EIP 1888 is on the way.
You like somehow this will turn it into a security, won't it? It'll be like, oh no, it was fine before, but now it's a security, so we're all going to jail.
Gary's gonna get us.
Yeah. Oh, they've done a stock split. That means they're clearly saying it's a stock.
Oh man,
and a stock is a security.
Every single one of these stocks that split, it was the top. Like Jeff Bezos sold the freaking top.
Did he sell, or did he just stop being CEO?
Well, he sold, and he got divorced, and he stopped being CEO. So he sold, started a new life, and retired.
Who's the new CEO?
I don't know. And then Zuckerberg sold top. Zuckerberg was selling something like $25 million worth of Facebook every day.
Yeah, he was just like market dumping
every day.
I was looked at that like thing of his like sales. It was just every single day.
The head of AWS.
He was twapping out.
Twapping. You can't call it twapping. That's not the right.
He was twapping out.
It's a T-WAP.
No, he was twapping out.
The head of AWS is the new CEO.
Fair enough.
Yeah. I got a question for you.
Yeah.
What is Coinbase doing?
Bro, Coinbase is completely incompetent. Coinbase
is that what Armstrong told you on your phone call?
Yeah. Yeah, but not in those words. But they're just so shit. If you got to think who fumbled the bag the hardest in crypto, right? You think go back to, like a Roger Ver style fumble. He had 40 billion worth or 60 billion worth of Bitcoin, and then he went all in on Bcash and then leveraged longed all the way down, and now can't pay margin call for 47 million allegedly. Who knows? But that's a pretty big bag fumble, I think. If you go back in time only a year or so, Flow was a $20 billion valuation or something. They had Top Shots or whatever it was. Mm-hmm. They were partially responsible for the NFT trend emergence. Like Top Shots was pretty popular. Completely bag fumbled. They haven't heard about them ever since. Another NFT one is Nifty Gateway.
We topped
like
them
January
too.
2021.
We
Everyone was
topped
on this.
them.
Yeah, it was fucking custodial
Yeah.
NFT buying platform. It was, and they were selling prints of NFTs. So they would sell an NFT. It was on sale for an hour or 30 minutes or whatever, and you could buy as many copies as you wanted. There was infinite of the possibility, or maybe 10,000. Maybe there was a limit. So people were buying prints, not even unique NFTs, and that they would sell out every time. And then within 3 months, bag fumbled. They came on our show, and that was the end of their career.
Griffin Cockfoster, it's
That was it,
over.
they were over. But who do you think has been the biggest fumble in crypto's history? Because I think Coinbase has got to be up there. I know they didn't fumble so much that, they got to IPO, they were worth billions, and I'm sure everyone from the early days of rich, like Brian and Baladi.
Oh, they were all
I'm
selling
sure they're all
like
rich.
$300 plus on coin. It's $45 now.
Yeah, that's them selling. That's them doing great.
Oh wait, no.
But
what's his face? Now these guys have done all right. The Paradigm guys, the one Fred.
yeah, he sold the top.
He
and then
sold
rebought
the
recently.
Pico top of Coinbase
Yeah.
and bought back recently. Yeah,
Yeah,
got his whole bag back for like minus 80%.
but if you think about what Coinbase could have been, like Binance came up 2017 and just stole their entire business, and like no one cares about Coinbase now. Like people don't use Coinbase. They use it maybe to
Marcin
buy
in the
their first
chat.
Bitcoin.
Marcin in the chat said Coinbase NFT. Oh my god, it's bad. I don't know if you.
So I think they're really incompetent. I had like a few gripes with them about stuff, and I like spoke to them privately about it. I spoke to people in Coinbase that I thought were responsible for the decision, whether it was like with like bad research that they were publishing or just like factually inaccurate, or other stuff I don't know if I can talk about. And it was just like, yeah, we don't know what we're doing. We didn't know how to do it properly. We did it wrong. We don't know what we're doing. We're overworked.
So I'm looking at Coinbase sales on Coinbase NFT. We have that on our platform, and it's like 20 to 30 sales a day on Coinbase NFT.
Yeah, that's quite bad. But it's not open to everyone yet, or is it now?
No, it's open to everybody now.
Oh, right, that's bad then.
And it's
Do you remember when they emailed everyone being like, we need more information, and like we need a picture of your fucking feet, we need a picture of your like you send all the information back, they go, no, that's good enough. Like take a picture, scan your eyeball now. And people just didn't reply.
The most
emailed everyone saying, sorry, that email was in error.
Yeah, unbelievable. Their most expensive NFT sale today is below 0.1 ETH. It's 0.0969 ETH, and it's in some kind of ape clone. And that's so it out of whatever 25, 30 sales today times, let's say 0.05 on average. So they've sold about 1 ETH, maybe 1.5 ETH worth of NFTs today. That's how many NFTs are transacted on their platform. Can I show my bag real quick?
Which bag is it?
Flip.
Yeah, go. Do a little advert section if you want.
Yep. Go to flip.xyz. All right.
I think you fucked up the audio for the most of that.
Oh, did I? Sorry. Yeah. No, we track Coinbase or marketplaces and aggregators and crap, and where the transactions are occurring, and Coinbase has been freaking rough. Yeah. It's what's amazing is the regular market. So this, do you think that is this high on your list of bag fumbles, like Coinbase NFT, or do you think just Coinbase in general?
I think Coinbase in general, because like they were just so early, and then kind of like blockchain.com as well. It was previously blockchain.info. They were so early, and like product failure or lack of market foresight or whatever, like really reduced the scale and ambition of their business, or they were very unsuccessful in building moats. There's no way Coinbase should have been like lapped by Binance so hard.
Yeah.
When it was like so telegraphed what was happening. And yeah, I don't know.
They added no tokens when they should have been adding tokens, and then they added all the tokens when they shouldn't have been adding tokens.
Exactly, yeah. It was like a complete fumble, like a massive overreaction to a wrong decision. Like
Yeah.
they missed the whole token, like retail demand for tokens, and tried to be like, no, we only offer Bitcoin and Litecoin. And then by the time it was over, they started adding like, oh, now we've got Peppa Pig Donut Coin, and we've got this new one that's got a market cap of $7, and it was released on Thursday. Like that, like it.
Yeah.
They just flip flop, flailing, trying to, I think, find revenue from somewhere.
So
And
on their NFT side, you remember they had like, I don't know, 10 million people on their waiting list for their NFT platform. When they released it, it was self-custody only. Like you had to use the Coinbase wallet or whatever. They had no like centralized version of NFTs, nor did they have NFTs that you could trade affordably. So it was like our launch partners, and it's like a $40,000 doodle or whatever. They're like, all right, 10 million people that want to trade NFTs. You need to give them like a $10 gift NFT or something, like an NFT, Coinbase VIP OG member NFT, like something that's like, or like have some launch NFT that's got 1 million of them and they're $10 a piece. Like you have to have something completely different. And all they did was offer a inferior method of both discovering NFTs and then trading NFTs than what already existed. And
they launched Nifty Gateway a year too late.
they didn't launch Nifty Gateway. That was Gemini.
Yeah, but it's the same product, like a custodial.
No, they didn't do custodial. They should have done custodial. They did self-custodial, like self-custody. But people who could do self-custody were already doing it with MetaMask and OpenSea. There's like,
Yeah, but they've got to do self custody to integrate with existing markets.
they didn't have to integrate with existing markets. They could have had people who sold their NFTs custodied on Coinbase. That's what I'm saying. That's what would have made it actually accessible to retail, because that's who you're targeting. The people that are willing to like use MetaMask and like do stuff on chain, they were already doing it. They figured it out. Like that was a million
there's
people.
a grand total of 0 people that want to trade NFTs but don't want to self custody or don't want to learn about crypto. Like that's just Instagram.
No,
that's just Instagram. I want to trade $7 NFTs. That's just liking a picture on Instagram.
No, because 10 million people were waiting for Coinbase to give them easy mode. And easy mode would have been, okay, even if it's self-custodial, make it to where it's like fully integrated on Coinbase's mobile app, and your version of custody is like a Face ID authenticated iCloud backuped wallet that was like super, super easy. And sure, your custody was on your phone. It was a mobile only product or something. But it needs to be like super easy mode. That's why 10 people were interested in it, or 10 million people were interested in it, because they knew they were supposed to like understand NFTs, but they even try MetaMask and you're totally confused.
I don't know about that.
You disagree with me. That's okay. You're allowed. Well, the self-custody version
What do you think
didn't
about
work.
the Solana phone?
I like it. Give me a Sol phone. I didn't sign up for one. Did you?
No.
Can they send us one?
Well, they had a call with me about it a little bit before it happened to tell me what they were doing and said if I had got any feedback.
All right.
And I was like, it's cool. What else can I say?
Here's a case for Sol phone. iOS, we cannot, like for our mobile app, we cannot even link to OpenSea because it requires a transaction. Like OpenSea can have a transaction. So like we can't link to OpenSea or Looks or Coinbase or anywhere where trades occur. So we cannot, in the mobile app, even link to a marketplace where commerce can occur. That is a level of monopoly by Apple that, in my opinion, is completely unacceptable. And for enabling Web3, enabling it at the hardware and OS level makes a lot of sense. So I think like a Solana OS, so what are they calling it? Sol OS? Making a Sol OS makes sense.
No, they're just on Solana backwards.
How do you use it? What does that become?
Just type it down.
I'm not going to do that. It's probably something dirty.
Well, so the first two letters are SO, so backwards it's OS.
Oh. Okay. I'm too dumb to type this. It's anal OS. There you go. It was something dirty. Of course it was.
That took a while.
Yeah, I'm a beer and a half in. I'm sorry. All right, so they got chat now realizes just how dumb I am. All right, so if you need anal OS in order to have a Web3 first, like a platform that you can transact on, because the guardrails on iOS are so extreme that it's not a fair platform to start with. Like you can't do things well there. So I think I'm still getting trolled about this. So I think that's why I think SolOS is an interesting idea, and also like Anatoly mentioned that. Is that also Solana backwards? Anatoly mentioned
Anatoly.
He mentioned that their alternative was corporate blockchain. I'm gonna cry. Their alternative was corporate blockchain, which would have required like 800 people, whereas the Sol Phone was like 80 people, and it would have been corporate blockchain. Like that's dumb stuff that people have been trying since 2016. So it's worth the effort.
I also like there was like a phone that people were really looking forward to, right? And they just basically bought it and changed it to anal OS.
Yeah. It was some phone that Android people were pumped for. And
yeah, so those people are now really pissed because they hate crypto. But,
yeah, they got rough.
But I mean, I do think it's a good idea. If you think about it from a blockchain growth perspective, like how do you onboard the next 1 billion people to a chain? It probably needs to be mobile. And if the current incumbents are hostile to the industry, someone's got to do it, right?
Yeah, absolutely.
I kind of think that like it would probably have gone better if it was like a neutral crypto phone launched by a new unaffiliated company or by like
Consensus.
Binance or something with like base level integration for like Bitcoin, Lightning, Ethereum, Solana, whoever.
Do you think the Solana phone will ever know what time it is? Wasn't that the big bug?
You know, it's based on proof of history or something, isn't it? So you don't
Yeah.
say. But yeah, you're just like calling people as an emergency. Oh no, no reception.
It's for something. That's what it says on the phone.
Yeah. So I do think it's like I think it's ambitious, and I think like no one's doing anything ambitious. No one's trying to go to that next stage. Everyone's trying to build like complex Ponzi schemes or rebuild an NFT marketplace or build a metaverse game with a fucking whatever. Like, so I do like that level of ambition to go like, what is actually a barrier to using a chain in the world. And I think like people making those really big ambitious bets, like who knows, they might sell 10,000 phones and no one never hear about it again and go, lol, remember the Solana phone. But I respect the ambition a lot to go like so big when, you know, the Sol Avax Luna, like Luna's dealing with lawsuits and shit. Avalanche is like doing what, like token incentives on subnets or something. And Solana are like, fuck it, we need to build a phone to put like in the hands of real people. Do you reckon they'll do a governance token for the operating system?
Yeah, got to. Always got to have a token. Okay, so could the Sol Phone replace the WorldCoin orbs? Well, it's got the camera scanner right there. You know, you just do it right there.
Well, you scan your eye or just use Face ID?
Yeah, well, it's the same thing, kind of.
But is Face ID good enough to, like, if I have two phones, can it say, sorry, you're already that, you've got one of these.
You have too many
faces.
Face. You have lots of faces. You could do it. But I don't know. I guess it's, well, you could authenticate multiple phones to one eyeball, one face. I think that'd probably work. I don't know.
Is the WorldCoin orb thing still going? I saw that they
Yeah, there were some.
like they took the orb casing off because the people were finding it creepy, so it's just the insides now.
Yeah, that's like I saw one that looked like pink or something, and they were holding it up in a bar. Someone took it to a bar, and they were like getting this poor innocent woman to scan her eyeballs. What WorldCoin should really do, or I guess A16Z or whoever backed it, they should really just buy Clear, the airport security people, because that provides real utility. It's like, oh, I'm gonna skip this line. I'll scan my eyeballs. Easy. I'll pay $100 to scan my eyeballs every year. I did this. If you hack Clear, you can find my eyeballs on there. But WorldCoin does that. They have a business model and eyeballs, and then they can airdrop everybody and say, we have given you the utility of skipping the line at the airport. It's the same thing. This is a Clear merger opportunity. Have you ever used Clear? You know what these are? You know what I'm talking about?
No.
They don't have this in Europe? Okay, so the TSA lines, you got to stand in for like an hour. You just skip them because you scan your eyeball instead, and you go straight through the line.
You can just pay money here.
Well, we pay money and scan our eyeballs.
But why did you do the scan?
So that you can skip the line. So they're authenticating your like ID via your eyeball scan, and so that you don't have to wait for like a TSA agent to look at your passport or your license. I don't really know.
You know, passports have got like an RFID chip in them.
I don't know if ours do.
Really?
I don't know. I just know you scan your eyeballs and you skip the line. That's all that matters. That's the point. That's real utility.
I just don't understand why they're making you scan your eyeball. Just tap your passport on the thing.
No, you scan your eyeball like this, and then it says green dot. You're good to go. And then the lady walks you to the front of the line, and you go to your gate. You don't do this.
No. Well, I do the same thing. I just don't scan my eyeball.
Well,
That's
this
the bit I don't understand
MB in the
process.
chat says burgers don't have passports. That might be right. That might be why.
Maybe this company is actually partnered with WorldCoin already, and they're just harvesting loads of your WorldCoins. So if you try and get one now, they'll be like, "Oh, we've already issued you yours." Clear is like got a treasury of like 10% of all WorldCoin supply.
They're just staking them on my behalf. I'll get the airdrop later when mainnet launches.
Yeah. What other stupid stuff happened? Maybe
We need the chat to tell us what's the dumbest thing that's happened in the last couple of years. Solend. Oh, that was a pretty good one, but that was predictable. You're familiar with that one, right? Oh, Steppen. Oh my gosh. Did you follow Steppen, or was that while you were doing?
Oh, did something new happen?
No, it's just the whole fact, like step to earn, the concept of it.
Oh yeah, it's stupid, but like that was like a dog coin type of stupidity, wasn't it? The
Our block's phone
USDD is one.
Yeah, what is
like?
he doing?
I don't understand. What's the end game?
I don't know. I heard he's like so over collateralized, he wants people to short it or something. I guess some kind of weird meta game. I don't know.
I don't get it. I just don't understand what. He also started it before Luna collapsed, right? So like maybe he's like, oh, for fuck's sake.
Yeah, but he like doubled. He doubled down on it. He doubled down on the whole thing.
Down on it. But what's the end game? What's the point? Because it can't grow to a certain size. It can't grow too big because then it won't be over collateralized anymore, and will have a similar fate to Luna because it's the same. So what's the end game?
I have no idea.
Me neither. Bizarre. We should invite Justin back on. He's actually gone up since his previous appearance.
Yeah, he's like,
because he was like getting liquidated last time he came on, right? At the bottom in like May, and they were like people would like stop hunting him or something because he slept with someone's wife.
What about generative art? What's your stance on that? It all went to zero.
Same as it always was. Gone where it's destined to go.
You know, I was down so bad I had to print some.
Oh, you printed out real pictures.
Yeah, I made sound panels out of mine because I was just that's the only way to cope. I just had to put them in real life, and that way I walk into a room and I see my sound panels from my generative art, and I'm like, look at that utility on the wall. It's definitely worth the 3 ETH I paid.
I did some like reflections on like the mistakes I made over the last 2 years. One of the, because I was going to try and publish an article like, here's all the things I did wrong. Because I think unless you like write them down in reasonably real time, you just post rationalize them later. Like you go, oh, that was someone else's fault, or you forget about it, or you know, and it's one of the only things that I think I did put some effort into this time was like trying to make sure I knew the mistakes I made and why I made them and stuff. Well, and one of them that happened to me several times was that the casino-ification of an NFT mint overrided the fact that I knew it was A, money-losing event, B, ugly, vapor, scam, whatever. I knew all those things intellectually, but it was fun. What am I going to get? Ooh, I might get a rare one. And it like overrode the rational thinking part of my brain such that I made the same mistake several times because there's this like period of time where you're allowed to mint and it's going down quick and other people are doing it and it's fun and everyone's going to be like, oh, you're going to get the reveal all together. And so I would mint stuff that I know is just like a waste of money and I'm never going to be able to sell it and blah, blah, blah.
Those are the ones I did the best on.
But then instantly afterwards, I'd be like, why the fuck have I done this again?
Yeah.
Like they all look bad. Like the high's gone.
See, I like some of the generative art stuff I really liked. And so therefore I lost horribly because I bought at a bad price and number went down. So like Ecumenopolis was one of those. Oh my God, I don't even want to look at what I paid on a dollar value. Car prices, you know. But then
I bought one of those fucking dinosaurs.
How's your little baby dino art block doing?
I don't fucking know. There's only 100 of them.
Yeah.
So that's
real
rare.
That's real scarce. Rare.
So if one Bitcoin is worth $20,000 and there's 21 million Bitcoin, how much is a dino going to be worth, do you think?
A lot.
It's going to be a lot.
A lot.
Think about that.
Yeah.
It's going to be a lot.
I feel like
they're scarce.
I love the NFT world. They're in their own place. But when I didn't believe in something, I did great on it. What were those ones that was like Ethereum blocks in a picture? It was old. The only reason that there was potential value is because it was old.
Yeah, I don't remember.
I don't remember.
It was like it was just a picture of the mind block.
Yeah, it looks like a calendar of like Ethereum blocks. It's like a calendar page of an Ethereum block.
I bought one of those for 25 ETH, one of the first ones or something.
I made some like double-digit ETH on that because from the moment I was buying them, I thought this is the dumbest thing I've ever seen. And as soon as I was able to make money on them, I did. And it was great. And then I think, oh, look at this. This is AI-generated art that's like extremely difficult to produce. And look at the talent and look how beautiful it is. And then I just lost incredible amounts of money on those. This is real value. Scarcity. Crypto art, that's what it was called. Poor crypto art.
Yeah. The other thing I did quite badly wrong is I did like half-assed analysis on stuff when it was brought up a lot. So like I didn't really care about the alt layer 1 trade too much because I thought that it was basically a momentum trade because Ethereum was broken and that they would get to valuations that most of them would be unable to ever like recover from, and when it went down it would go down fast, and I think I was like partially wrong about that. But I was never super interested in the trade, and whenever I needed to take the trade I just buy Solana because Solana seemed like the most legitimate out of them all. So like I kind of ignored Avalanche and Luna for the majority of 2021. Bought Avalanche way too late. Like basically at a local top, it went down like minus 50% straight afterwards. And like I eventually managed to sell it fine, but because it went up again. But and then like Luna, I didn't even really look into it because I was like, oh, it's just like a fork of Cosmos with like something attached. Like
I didn't even know it was a
thing
Cosmos
attached,
fork.
and then like then eventually did some like half-assed analysis on it towards the end of 2021. Like, okay, this thing's getting really popular, and at the start of 2022, it was like carrying the market. Like, it was the only thing making new all-time highs, and then they started bidding Bitcoin and like, you know, pumping the Bitcoin market with their Luna sales, basically.
Yeah, what could go wrong?
So I did like another like proper analysis, like, okay, what the fuck is going on here then? But I did throughout the year, I did all these half-assed analysis and was like, I think this will probably happen, and then did nothing about it. Like I didn't do anything. Like I don't know what the hit rate would have been. Like it would have been reasonably good. If I'd managed risk, it would have been even better. But I just did nothing. I was like, this thing's gonna go like crazy, or this thing's gonna go down. But I'm going out for some drinks now, or I'm gonna play some video games. And then I just like forgot about it. I looked at it like a month later, and it was like, oh yeah, it did what I thought it would.
I think the alt layer one was interesting because it was probably the cleanest repeat of DeFi on ETH in 2020, just on every chain. You know, like whether it was Solana or Avalanche or Phantom or Near or whatever, except for layer twos, Arbitrum and whatnot. They didn't. They're like DeFi on X chain didn't go very well, but on all the alt layer ones, they basically repeated DeFi Summer on their chain, and it was with like what was Trader Joe. You look at the smart contracts and they're sushi contracts, exactly sushi contracts. But it didn't matter. That's like liquidity slammed in there. APYs were gigantic on any of these. And it was copy pasta from EVM stuff that you could trust with, putting dollars on. And they did really, really well. That said, I didn't participate in it. Like, I just ignored it in most places. I did it a couple times, but not near in terms that it was a true rotation, because it was Near was one of the really late ones. And I didn't touch it. I didn't go to Arbitrum at all. I didn't do much on even Solana. But yeah, those alt L1 stand up of tooling
happened on BSC first.
BSC was first, and it just was a template that repeated on rotation, which is what makes it great, right? Like on rotation, repeated half a dozen times.
Yeah, I think it got like weaker every rotation because people like as you figure out the game plan or the playbook or whatever, you take profit sooner because more people have figured it out and everyone's trying to front run each other and stuff. Oh man, if we could go back to the BSC pump times, I'd be happy. We didn't know what we had.
The liquidity.
We were all mocking it and we were all like salty about all these like TikTok people making weird synthetics forks that were all getting hacked. We didn't know how good we had it back then.
In real life,
February 2021.
I had in real life friends asking me about SafeMoon, and I was still holding on to ETH DeFi. Like I got wrecked in February. made it all back, but I got freaking wrecked, expecting the top to last longer, and then you like watch the rotation happen, and like you're not in it, and you're like, hey, those tokens I was thinking about buying next, like Matic and Helium and all this random crap with high valuations, but they were just turbo pumping, and I'm just holding on to my DeFi bags like, oh no, my bags are going down and theirs are mooning.
I think ETH DeFi got a lot of people because it was like the first time anything sort of like real had been built in crypto. Yeah. Like anything like useful.
This is the future. Like we found it.
Yeah, like non-vapor. Like
meanwhile, they were called
Bitcoin,
like Yam.
And there was like some Bitcoin forks that did interesting things, but like it's like kind of pointless. Like Litecoin has been consistently shipping like strange stuff ever since. It's got Mimble, Wimble, and shit. And like apparently it's all cool, but no one gives a shit really. It doesn't matter. It doesn't like get priced into the valuation, or maybe it does, but Litecoins just would have been even worse.
3-3 is in the chat, by the way, as another example.
Yeah, but then Ethereum was built, and then like just loads of ICOs and like nothing, and then there was this wave of like stuff, DeFi 1.0 or whatever, and I think because it was real, and other real stuff was like Bitcoin and Ethereum had just like gone up forever before, people treat them differently than other altcoins. And I think the only interesting question that I have at the moment is what happens to those things next. So anything that is real and can retain users and has a legitimate product and is useful, what happens to their tokens in any future bull market? Like does the Uniswap token look like a 2017 ICO? Does it just go down, sideways,
like
flat, and then just goes to zero forever? Or does it look more like Cardano, where it went up a lot in 2017, 18, went down, went back up again? Does it price itself that way? Because, and it could go either way, right? Like who knows what the right mental model is? Maybe it, like tokens just go up once and then they go down forever, or maybe if there is a real product backing or behind it, then it can have like a healthy real market. I don't know the answer to it, but I think it's the only question that is like interesting enough and dictates a lot of like what happens next in like future crypto markets. Because if it doesn't matter if you have a legitimate product or not, the token just dies anyway. No matter if you have users, revenue, usage, etc., then like, what's the point? Who's going to want to build anything real?
Yeah, that's depressing. Somebody in the chat proposed to other members of the chat to post their biggest L. Unicorn Paradise, got to call this one out. Theirs was, I sold 12 Fidenzas for like 1 ETH on average. And those went to like 150 ETH each, I think. Something like that.
Yeah, I mean, like, I think missing out on profit is bad, but there's a dude here who lost $8 million in Luna, so.
Oh, wow. Someone else sold Shiba early. Yeah, but taking the L curve at $6, we did a little.
Someone said staking everything in ETH locked on a centralized exchange.
Like forever, like locked until the merge.
Yeah, I faded the Avalanche ICO because I was a Bitcoin maxi.
Oh, they're talking about the biggest L's. Did you see the turn on Nick Carter for backing something Ethereum based? Like,
it was quite weird. His post was very good though.
You think Bitcoin maxis are down like as bad as anyone, pretty much, because they don't sell supposedly. So they've made no money since 2017 top.
Yeah, but I think a lot of people in that cult are actually quite new to Bitcoin. The people that are attacking Nick, I mean, I think a lot of them are the like 2021 entrants. Because I think the Bitcoin maxis from the earlier days are much more like reasonable. They're either like Paolo from Bitfinex, he's like a big Bitcoin maxi, but his exchange obviously has everything on it. He tolerates the rest of the industry and is ideologically Bitcoin maxi aligned. But he invests in non-Bitcoin stuff as well. But he would call himself a Bitcoin maximalist, and I think is one of the, you know, more principled ones. Like, touch wood that tethers fine. Someone's going to clip this and go, fucking, they had Suzu on, and look, you just said that Paolo's an upstanding bloke. But then I think a lot of the like really aggressive ones who are like unreasonable in arguments are often more newer entrants. But I might be wrong. I don't know. I don't, obviously most of them have blocked me because I talk about other stuff and I'm annoying online. So
it's like a parallel universe to me. I don't even see it anymore.
Yeah, but it in some ways, like, if you reframe Bitcoin's toxic maximalism as like Bitcoin pessimism, and then you take a bunch of like Ethereum culture and ethos and, you know, altcoin communities, and you call whatever they do like optimism. I think a bit of a blend would be better, because like the Bitcoin people are very pessimistic. They call virtually everything a scam, and oh no, they do call everything a scam, everything non-Bitcoin, including equity a lot of the time. And it, to me, that's clearly not true. Like, even if you think Ethereum is not a good investment or not as decentralized or markets itself incorrectly or whatever, I think it's clear that it's not a scam, and the people building it are not trying to like swindle. The people building it just believe that it's good for the world, right? Like, they're not trying to swindle people out of their investment. Like, I don't understand how the scam would even work. Right. And there's stuff built on Ethereum that's clearly not a scam, like Aave, Maker, Curve, Chainlink, etc., that like are legitimate projects. You can think they're bad investments and Bitcoin's a better investment. That's fine. I can get behind that. But then on the altcoin, shitcoin side, you have people like printing bank or governance tokens to offset impermanent loss with an unsound scheme, or building Luna UST as an unsound scheme, or doing all this like real weird fucked up like stuff. DeFi 2.0 was largely just like Ponzi-nomics
and getting backers easily because liquidity was easy.
Yeah, but like my point is, some of that Bitcoin pessimism applied, I think it came from the idea that like everything needed to be fundamentally sound. It needed to be like, you need to have arguments over stuff that might be broken, because if you have stuff that's broken, it's like devastating. And the way these systems are supposed to work, like the way Bitcoin is supposed to be a trustless system that doesn't require an optimistic group of people to get together and fix it when it goes wrong. It needs to stand up to adversaries and be fundamentally sound. And so much of the shitcoin stuff is not that. It's like, oh well, if it all breaks, we'll just get on a Discord call and reboot, or we'll print a new token to offset the old token because we made some calculations in the model. And even the Ethereum community, I think, has drifted a little bit too far into this naive optimism, where it sometimes feels like the solution to Ethereum problems is like, we hope the founders are fans of Vitalik, and Vitalik's tweeting them to change their product will be enough. And it's just naive, because eventually the founder is going to be like a Goldman Sachs type entity, and they're going to say, fuck you, we don't care. We're doing what's best for us. And if you have a fragile system like that, then it will just fall apart. And I think a lot of the Bitcoin pessimism that is rooted in the toxic maximalism, I think some parts of that were good, because they won't stand up to that bullshit. They'll just go, that just makes no sense. And I like that part of the Bitcoin pessimism, but I don't like the bit where it's just, like doing personal attacks against Nick and his dad and all this stuff, because he's like it's not even like he was secretly funding all this stuff and pretending to be a Bitcoin maxi. They just like made a different version of him up, and then didn't like it when they understood the real version. So
yeah, I do agree in terms of what you said, that there's too much of a requirement on collaboration in altcoin land, and that people have their best interests in mind. Like, I should have your best interests in mind, like, versus Bitcoin, where being antagonistic toward one another, being adversaries, is a scenario where the thing still works. Like, that's what's truly novel and incredible about Bitcoin. And more DeFi structures. A lot of our issues that we've seen in Ethereum and whatever, everything else crypto, has been where we're like, oh, well, it'll work fine as long as you don't do that. As long as you don't do that.
Yeah, or even in a bunch of the collapses, there's like, oh, someone's doing an economic attack.
Yeah,
and it's
how dare they do that?
If an economic attack is possible, right, it's not an economic attack. You've built something that's broken. You
Right.
can't have a scheme that works and no one loses money as long as no one does an economic attack.
Right.
And the economic attack just happens to make them money. So it's an economic attack that's profitable for the adversary. And I think there's a lot of that where people like, they've become so tribal in these like little shitcoin circles where they go, oh, this would have worked fine as long as that bad guy didn't do that thing that breaks the whole scheme. And they don't think like, why was that possible? Why was it possible to break the whole scheme? You know, so
reminds me a lot of our debate with Hasu when he came on and was talking MEV and stuff. Like, I think that's a pretty good argument for why it shouldn't matter what you can do with MEV. Those things should be supportive of the network, right? Like, or the network should be anti-fragile against them. So if MEV can be something that takes from the ecosystem, then the ecosystem is designed poorly to whatever attack vectors exist with MEV.
Yeah. I think it's interesting. I actually think that a lot of people now are in this sort of post-Bitcoin maximalist mindset. They don't talk about it much because I think if you talk about the stuff here, you just get mobbed by one group or the other, and it's not fun. But I think a lot of people that agree like 90% with Bitcoin maxis, and I think I'm one of these people probably, where like I think Bitcoin's great. I think Ethereum is not a scam and is doing something that's important. I think tokens are broadly stupid, but tokens like protocol equity for legitimate products that have, you know, users make sense, because the other option is private company equity, which has enforcement risks against it much greater than decentralized on-chain ownership.
Mm-hmm.
So I think tokenizing everything is ridiculous. I think like so much of the froth in NFTs is stupid. I think people built Ponzi schemes with DeFi. People did not think enough about what they were building or how a product worked. I've been like, over the last few months, I think it's been remarkable how little people seem to understand about the things they lock their entire net worths into. Like people, they have a lot of followers. They're like writing about, here's my thread on how this works. It's just all wrong. I'm like, people are retweeting this. People are learning from this person. And I think for the 90%, I agree with the Bitcoin maxes, but then there's like 10% where I just can't agree with them at all. And I don't know what that area is, but I think that's where more and more people are ending up, like some post-maximalism type thing, like token minimalist or something, where don't want to tokenize everything, don't want the Web3 Andreessen Horowitz thesis of a podcast having its own fucking token and microtransaction in tokens for everything. I don't want that. I think it's stupid. I think it's pointless. I don't think it adds value to the world. But I think there are cases where a token makes sense for some stuff. And yeah, maybe they're securities. I don't care about the SEC's fucking rules. I don't live in America. I don't think the SEC is a credible regulator. And I think crypto equity is a new and novel thing, such that it shouldn't fit into a framework that was made about an orange grove or whatever. So I think more people are ending up there, but I don't know.
I think what makes it so challenging when you're going through that process of sound logic is that you can believe all those things, and yet following them, you will not win on the way up, right?
I don't think that's true. You will win on the way up. You just won't win as much as some of the stupidity.
Well, that's what I mean. On a relative basis, you'll see an absolute moron over here getting.
Yeah, but the morons then get wiped. Like people...
But you have to know that going in. Like that requires that is an essential learning from experience. And on your first cycle, your second cycle, where you know a little bit more, like all you're seeing is like all my friends are getting rich and I'm not, type of thing. You know what I mean? Like, or all these people over here are winning on something that I don't understand where the value accrual comes from, or where, like, why would it get this level of hype? And either you jump on that train, but know for a fact that train is going to crash, so you're planning to jump off it, or you ignore it. You don't play on that playground or even attempt that train, and you ride on your train. It's going really slow and it's more linear. And then when everything crashes, your stuff gets freaking wrecked too. You know what I mean? Like it's really.
I do think there is like a thing in crypto where people see like the best performing, and like even me, right? Like I got into crypto a similar time to Sue and Kyle, I imagine. I don't actually know because I only heard of them for the first time in like 2020, I think, or 2021.
Yeah.
But I took a lot of time off crypto Twitter in 2018 and 2019 and just posted stuff every now and again. So maybe I missed them. But, you know, I go into crypto at a similar time to them. And at the like peaks of the frost bull market, they were like, what, 20 billion, 40 billion assets under management.
18.
Now I know that maybe it was all borrowed, so it was like belongs to like the users of BlockFi and Genesis and Voyager and shit. But like it's easy to get into your mindset like, shit, how have I fucked this up so badly that they've made 40 billion and we got in at the same time? Yeah, sure, they started with $1 million and I started with 200 quid, but like the opportunities were there for me to go more balls to the wall or like grind harder or whatever. But the thing is, then they completely unwind. They, you know, they zero out, and Sue's trying to sell his yacht and his good class bungalow and or whatever. The Fat Man Terror rumors are, and then you're like, okay, maybe I actually did okay because I didn't blow up my entire net worth in the last 6 months.
I didn't get a Wall Street Journal notification about.
So maybe I'm doing all right. So I think in crypto it's really easy to see the best performers and think you're doing badly and get this urge to like catch up, and those emotions I think are really, really, really bad for people, because all you need to really do is like the asset class on 4 occasions has gone up 1,000,000% in a year, and often it's done rotations of many things going 1,000,000%, and you could do one after the other. You don't need to do every one of them. You just need to get a decent return a few times and try not to lose it all and go, great, I'm doing better than I was a year ago. This is good for me. I'll keep trying. I'll keep learning, and go forward. But I think many people go like, okay, I need $1 billion in a year. And the only way to do that is to take billions in leverage from all the crypto lenders with fraudulent loans.
It's a super valuable mindset and a super difficult one to put yourself in.
Yeah.
I think,
but those people all blow up. They all do. And like often there's the odd one that doesn't. But if you go through the cycle and think about them, you remember the Dogecoin millionaire?
Oh yeah.
There's the guy who would like turn nothing into $1 million or
Lucky to have
whatever
6 figures
Doge,
now.
and he was not selling, and that was the top. The article came out, it was the top, and he held it all the way down until Sheeb flipped Doge.
Oh really?
And then he all in Sheeb.
Oh no.
And I think he went on to SafeMoon or something. You know, and like they make a ton of money and then they don't keep it. And there's many such cases. And often the people that have a thesis, they let it play out, they get annoyed by the stupidity of everything, because they could have made more money by just relaxing their rules, but at least they keep the bag that they do make, even if the bag is smaller. So
yeah, we either have to end the show or I have to take a break.
No, we can end it. We've been doing it for like 2 hours 20 and we didn't have anything to talk about really. Are we gonna just keep doing it? Are we gonna change the name or what? Because originally we were like, let's never change the name because it's funny. I think it is funny now, but I do get a bit annoyed with every single tweet several times a day saying, are you going to rename it Down Only? Like, bro, you're not the first person to come up with this joke, man.
No, I think, you know, it may go down another 70%, but DCA, bro.
All right, we've got to keep it. I think we just keep it. It's funny.
Yeah,
we've got to keep
roll
it,
with
but
it.
you need in every introduction from here forwards, you have to pick something that's going up only.
Okay.
It's like, even though the markets are down, blank is up only.
All right.
And it's got to be a different one every time.
Gotcha. Let's do it right now.
So like this one's inflation or something.
I was thinking like my blood pressure or something like that. Thank you for coming to Up Only today, where my blood pressure is up only while my net worth is down only. uponly.tv/FTX. You can trade with 0 fees. You can DCA. You can do all the things that you want to do on the FTX app. Track your portfolio, but you can't track your blood pressure there, at least not yet, until Sam buys those apps as well. uponly.tv/FTX. Thanks for being with us. Thanks for joining us. Go to Up Only TV to check the reruns. Give it a like and all that crap too. Thanks so much. We'll catch you next time, hopefully soon. Bye-bye.